Well, it was a lackluster session from the very start, but initial weakness opened the door for buyers to make their move. And, well, we actually saw NASDAQ spurt to record highs, and the Dow came real close to reversing into the plus column. And then word came out that the GOP may phase in corporate tax cuts. Well, that news flipped the script, and any hope of a rally was sort of dashed. We started to drift into the close. Now, I will say the session wasn't a complete disaster, but it did heighten anxiety that could roil the market. We've got two big things happening this week, right? The tax plan on Wednesday and, of course, the jobs report on Friday. I will say, even though major indices only down fractionally, the breadth was more bearish. You had almost 2,000 losers on NASDAQ versus less than 1,000 winners. Investors right now are determined to ride those winners, and of course they include Facebook and Apple, which report Wednesday and Thursday respectively. Now, technology results in general have been nothing short of magnificent, according to FactSet data, convincingly crushing Wall Street. This is how much they've beaten Wall Street estimates by so far. Semiconductors by 42%, software by 12%, internet IT by 12%, and then internet by 10%. Let's talk a little bit about the state of the American consumer. Today we got personal income and spending data, and it underscored my observation that consumers are really stepping up to the plate. Of course, when income climbs 0.4% and spending surges 1%, that's a huge gulf, right? By the way, most of that auto purchases surged the most since 2009. You remember cash for clunkers when that was all the rage? Well, that wide gulf in spending and income suggests that consumers either must be digging in their piggy banks or maxing out credit cards, or maybe both. Now, in this case, it was savings that took a hit, plunging 5 percentage points down to 3.1% from 3.6%. That was just in 1 month. Now, it's a double-edged sword of sorts. Now, on one hand, we don't want consumers hoarding money, right? The reason we're pushing tax cuts so hard is that we want people to line their pocket with more of their hard-earned money, but also to put that money to work. And it doesn't have to be blind consumerism. Just put it into society. Many also worry, though, that savings dipping this much to such low levels could be dangerous. So the bottom line is we're never going to be a nation of double-digit savers again. That's just not going to happen. But that's another reason for Congress not to mess with our 401k plans.